The following is a presentation of TFNN. It is now time for The Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me. Folks, I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. But mostly, folks, it is to provide you with the tools so that you can lead an inspired life. So let's go take a look at one of those tools. This is the tool, folks, that we all need. This is the tool of being humble. Now, think of it like this. Sir Isaac Newton, one of the greatest scientific explorers, made the following statement near the end of his life. He said, "I feel like a child playing by the seashore while the great ocean of truth lies undiscovered before me." Folks, if you think about all the great heroes out there, they're all humble, because a humble man can do great, humble man or woman, I should say, right? A humble man or woman can do great things with an uncommon perfection. Why? Because he is no longer concerned about the accidentals like his own interests, his own reputation or her own reputation, and therefore we are no longer needing to waste efforts in defending them out there, folks. Humble, that's what it's all about. Now, to accomplish great things, folks, all we must do is act. It's really important to act out there, otherwise you can't accomplish anything. You also want to make sure that you dream and that you've got big pictures, big plans in place. And you want to use your imagination, folks. Your imagination has so much to do with your life, the pictures, the successes, your desired results, folks. You need to be able to create a big vision out there. Use your imagination. And it is a TGIF Friday. More than that, it is a full moon Friday out here, folks. And when we take a look at the markets here, you talk about roller coasters. Right now, you've got the Dow futures up 96 points, the ES Mini up 10, NASDAQ futures up 24, Russell 2000 leading the charge on the way up a full percentage point here, up 8 points. Our call-in number is 877-927-6648. If you're listening on the radio, thanks so much for doing that. Maybe you're listening to us on tfnn.mobi on your mobile device or iPad, iPod, whatever it might be out there. You can also watch us on TigerTV. You can always catch an archive of this show, folks, on Channel 9. Just go to the homepage at tfnn.com, and you'll want to do that because you're going to be able to take a look at the charts. And one of the first charts that we're going to go to, we're going to pick up where we left off yesterday. We are going to go ahead and take a look at the ES Mini, the S&P futures. Now, right now, trading out at 1408, and we take a look at what it did. Yesterday on the show, we were showing you the A to B equals CD down. Now, that A to B equals CD down, there were a couple levels here that we were looking at. The first one was at 1400. And really it was that 1396 level where the market moved down to. In fact, the low that was put in at about 11 o'clock yesterday morning, out at 1395.25 out there. And when we is that yesterday? No, that was on August 30th. I apologize. That was August 30th. That was out there. Yeah, August 30th. That was yesterday. Hello, I got to wake up here. So that was the low that was put in there. What has the market done since then? Well, what the market has done since then, if you're watching us on Tiger TV, number one, the light blue shaded area that you're looking at was a 0.618 Gartley sell pattern. That pattern failed. It failed miserably right as we were coming into the 9 o'clock session. Big spike up in the ES Mini, making a 100% move of a move. And that was coming back, folks, to the C point out there on your A to B equals CD down. That was coming in the 2 o'clock time frame on August 29th. That was right out at the price point of 1412.50. When you do a 100% move of a move, what do you do after that? Well, what the market does is it rests. Right now, it's pulling back. As we come into the 9:30 session here, if the ES Mini closes below 1407, you're trading at 1407.75, it'll give you a bearish engulfing candle. Now, when you take a look at where we're really at in the markets, if we go back and take a look at yesterday at 9 o'clock in the morning. So let's go do that. 9 o'clock in the morning, the ES Mini was trading at 14.04. That was high, 14.04, closed at 14.01. We're trading at 14.07 right now. So what we've really done here, folks, is all we've done, it's been a wild roller coaster ride, that's for sure. But if you had closed your eyes out there, all that we really would have had here so far was just simply a sideways move. Now, big move down yesterday. You take a look at patterns that are out there, patterns that are always completing. There were signals out here that you certainly were going to get a move up, because when you complete an A to B equals CD down, what's the next thing that the market's going to do? It's going to make an A to B equals CD up. And oftentimes what you're going to do is you're going to go ahead and complete some type of pattern. Maybe it's a Gartley sell, maybe it's the 618, maybe it's the 0.786, maybe it turns into a butterfly. But you're always going to be making the next pattern out there. You got your first signal last night at about 10 p.m. At 10 p.m., you put in a little bullish engulfing candle. You got a nice close, a little bit higher close. The following session, that's really the lows out here that were the actual low for the C point, for the C point that you would use on this Gartley pattern came in at 7 o'clock last night. But your first signals came in at about 10:30 last night. You got another signal at about 3 o'clock in the morning with the bullish engulfing, and the market just simply moved from there. But as you can see, if you're watching us on Tiger TV right now, and we still have 13 minutes in the session, so we'll go see, what happens out there. But right now, it's giving you that bearish engulfing candle. What I expect to see here is the markets are going to be basically flat, going back into where we were yesterday until we see good old, Uncle Ben come out with whatever his statements are. And folks, it's probably going to be in the first hour or so where the market's going to just simply have to digest it. Don't be paying attention necessarily to that first move or that first 5 minutes out there. Oftentimes, though, folks, that is a head fake. Now, quite frankly, if you were a bull, what you didn't want to see happen, quite frankly, is what actually already happened here this morning. What you would have preferred to have seen is you would have preferred to see the completion of an A to B equals CD down and waiting for the Fed minutes and then for a move up here. So kind of interesting that the market has moved up, anticipating whatever it is that Uncle Ben may have to say. As we continue to take a tour around the markets, because there's a lot to take a look at. It is Full Moon Friday. The full moon, actually, folks, coming in at about, I think it was about 4 or 5 to 9 Eastern Standard Time. Pretty interesting how the market spiked right up into that 9 o'clock time frame, right up into it. How does that happen? Tell you the truth, I don't know. But if we go take a look at what the markets, let's go over to the currency market. We certainly have to go there. If we're going to start out by taking a look at the Queen, then we'll certainly go take a look at the King. Now, if you're watching us on Tiger TV, you're seeing just simply some incredible patterns out here. Let me describe to you what it is that you're looking at. Number one, let's take a look at the inverted head and shoulder pattern. And I've got that identified for you here on Tiger TV. I'm going to go ahead and blow that up on the screen for you. At the bottom, you've got basically 3 candles that form that head. You're looking at the July 25th, July 24th, and the July 23rd area. That becomes your head. Your left shoulder out here is the time period of really July 12th, July 13th out there. That would be your left shoulder. The right shoulder coming in on the August 2nd. So it's really the August 2nd, August 3rd candle that formed that. Really beautiful inverted head and shoulder pattern out there. What that does, folks, what that does is that sets up your neckline. So the neckline, really, if you're taking a look at the Euro-US dollar currency chart, what you want to do is go back to July 17th. And you want to go to that high, 1.23155. Your next touch point on the neckline is going to be right out there on July 27th as it makes a high of 1.23889. That becomes the line. That is this red diagonal line on the up angle here. And if you take a look at the euro, take a look as the euro, and I think this was last Friday, right, August 23rd, so that would have been last Thursday. So last Thursday, what the euro was doing was giving you basically 3 patterns were completing. At least 3 patterns were completing at the same time. You had a 0.786 Gartley sell pattern. That pattern really still in effect here right now. You had a 1.618 butterfly pattern. That's the yellow pattern you're looking at. The 786 Gartley happens to be this lavender color, this purple color that you're looking at out there. And then what you also had, folks, was you had that test of the neckline. What has the euro done here this morning? The euro has tested that neckline again. That neckline acting as resistance resistance. Now, that neckline gets broken, folks. That is saying that the euro wants much higher price. And when you take a look at a .786 Gartley, when a .786 Gartley fails, and you've got all of this other area of support, that would set up that what the euro would want to do is it would want to turn into a butterfly. And you say, Steve, what is that butterfly number? Well, if you take a look at what that that would be a 1.272 expansion, maybe even a 1.618 expansion, because look at the butterflies, and there was really two butterflies that made on the way down, two 1.618 butterflies. So you would go from the swing point of June 18th all the way down to the low that was put in on July 24th. That would send the euro up to 1.29381. That is if this area here fails. That means that you're going to get a close above the neckline, and you're going to simply negate all of those other patterns that are out there. But still a lot of day left in the trading session. Let's go switch over here to the now I guess I'll go back to let's go take a look at the U.S. dollar. So if we take a look at the U.S. dollar this morning, truly getting hammered, taking out the lows, coming back and making another move of a move, 100% move of a move, coming back into the swing point from May 21st. That low out there, 81.03. So far today, it's gotten down to 81.04. It's pulled back quite a bit. When we take a look at volume, though, so far, 8,300 contracts. At 8,300 contracts, going into 31,000 contracts, so I would expect that this area, quite frankly, the 81.03, looks like it is a three-river Morningstar candle formation out here. I would expect that this would hold. That is the low of 81.03, and as I say, in the U.S. dollar, what you've done is you've gotten back all the way to the price point of 81.04. 877-927-6648. Let's switch back over into just simply the futures contracts. Let's go take a look at the larger picture out here. Let's go take a look at the, now we started off with the 30-minute chart on the ES Mini. Let's go pull up the daily chart. That's what you're looking at on the screen here. What we can see here on the daily chart, right now you've got the ES Mini trading just slightly into that March 27 swing point. That March 27 swing point, folks, is where we have a resistance line. That resistance line was established on March 27th. It was tested on April the 2nd, acted as a resistance area, ended up being tested again then August 20th, August 21st out there, was tested on August 23rd as well. So there's a strong line of resistance. Now, if you take a look at the bottom of that swing point, 1406, even Steven, it's now trading at 1406.75. So that happens to be a resistance area. Of course, the real resistance is going to be the bearish engulfing candle. That is from the trading session of August 21st. That is what the market has to take out in order for there to be some real momentum to the upside. Otherwise, it's just the yin and the yang and just simply testing some areas. What I can say is if you are a bull, what you don't want to see today is you do not want to see the market move up, come into that resistance area and fail. Why? Because it is full moon Friday, folks. And on a full moon, if the market is moving up into it, that is likely going to mark another resistance area for you. 877-927-6648. We'll be right back, folks. Give us a call.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We got the Dow futures up 87 points right now. S&P futures up 9. If we take a look at the commodities out there, you've got light sweet crude trading up $1.80 out at 96.41. You've got gold trading up $7 at 16.64. Silver up 31 cents out at $30.76. Natural gas pretty much flat. If we take a quick peek around the world, over in Asia, we handed the ball off to Asia last night. You had the Nikkei down 1.6% off 143 points last night. The Hang Seng off 70 points. The Shanghai down another 5 points, closing, I believe, very close to its session lows for the week. Not a good sign out there. You've got the FTSE up 22 points right now this morning, and the DAX up 81. Let's just finish off here by going back and taking a look at the ES Mini Daily chart. That's what we've got up on the screen now. What you can take a look at here, just kind of as a ultra short-term indicator out here, what we can take a look at is take a look at this is making, folks, it's making what? Lower highs. It's been making lower highs ever since that bearish engulfing candle out here. And if I just simply draw this on the screen, this red line coming down. You also do see one of these great Bud Rolf's channel lines out here on the ES Mini. Yesterday, that area was broken, but what did hold it is the support of the August 24th level. That low was 1395.25. Yesterday, it got down to what? 1395.25 even out there. Let's go take a look at some of the other futures markets here right now. Let's go go take a look at the NASDAQ futures. Why the NASDAQ? Because that has been the strength inside the marketplace. What did the NASDAQ do yesterday? Another bearish engulfing candle. So if we take a look at the NASDAQ out here, and we'll go start with all the way back to March 28, 2012. We're looking at the daily chart out there. That was the actual top there was 2790.25. So 2790.25. You made that high on March 28th. Very following session, you do it, on March 27th. March 27th, it makes 2789.50, 2790. Okay, so the actual high coming in on March 28th. But what it did was it engulfed the prior session candle, folks, and that set up the resistance area. What did the NASDAQ futures do here in recent days or the last couple of weeks? Well, on August 21st, tries to get up over that area, and it fails. And what it also did was it engulfed the prior session being August 20th. Another bearish engulfing candle. That was not enough of a test. August 23rd tries to get back up there, again. And what did it do on August 23rd as it tried to get back up there? Kaboom, failed, created another bearish engulfing candle. Then what's it do? Tries to get back up there on August 27th. And stays up there with a couple of doji, one spinning top candle out there. It means the market is tired, uncertain as to which way it wants to go. But, of course, yesterday, what do you get? You get another bearish engulfing candle. So, really, the cool thing about the marketplace, when you take a look at it, you don't often get opportunities like this. This is going to be, if these highs get taken out here, when you take a look at, just simply from a candle standpoint, when you take a look at this area of resistance here, an area of resistance when it gets broken through, what does it become, folks? It becomes support. That means you've got to get a close above, with conviction, above the 2790.25 on the NASDAQ futures. Right now, the NASDAQ futures are saying it's not going to happen. At least it's not going to happen today, is what the futures are telling us. If we go take a look at the Dow, let's go take a look at the top line number out there. Take a look at the Dow on the daily chart here. The Dow having been the weakness now. When we were taking a look at the Dow yesterday, we were looking at two different things. Number one, we were taking a look at the bullish engulfing candle. That was a candle that was formed on August the 24th. There was enough of a move down in the Dow futures so that on the pop of August 24th, and engulf the entire body of the prior session out there. Yesterday, that low was taken out. That low was 13,011. Yesterday, the actual close on the Dow futures was 12,982. You can see how, today it's trying to pierce back up into that area. But what it has done here, so you want to pay attention to this on the chart. Here we're taking a look at the blue lines that you're looking at are really the uptrend channel that the Dow has been inside. The red line on the bottom is the trend line. So a little bit difference when you're taking a look at a channel, a price channel versus a trend line. And yesterday, what happened was you had the Dow move outside of that channel line, and it came down to the trend. Now, the trend that I'm using here, folks, is just simply if you go back to the Dow, what you would do is you would be coming and starting off with the low on June the 4th out there. Your next touch point that I use happens to be the low that was put in on July 12th. You can see that's the area right now that basically has held, but it's not a good sign when the Dow breaks that bullish engulfing support out here. Look for support. If this thing breaks below, if we get a close below yesterday, folks, says that the Dow futures want to trade lower. 877-927-6648. Give us a call, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 87 points, S&P up 9, Composite up 22, small caps up 5 points. We got Apple up $2.70, Microsoft up 30 cents, Google up $3, Cisco up 17 ticks, Intel up 46. Let's take a look at what's popping and dropping. How do you like this? The dollar-wise on the way up, Splunk Inc. How would you like that to be your leader there? What is that saying? It's actually up 13% here this morning, up $3.95, trading out at $34.44. We'll go take a look at that stock. Let me see here. Did they come out with some earnings? You had Splunk. I don't even know what Splunk does, but they had a Q2 net loss of $4.5 million versus $3.91 million the year before. They're getting rewarded for losing money. They did have revenue growth out here. That's good. So they've grown revenues. Their revenues 44.4 million share, 44.4 million versus 25.9. So Splunk is leading the charge on the way up out there. Couldn't have been better than that. You got Google up next, up $3 and change. Amazon trading out at $2.49. That's up $2 and change. You got Salesforce Innovation up $2 and change. SAP AG up $2. Omnivision up $1.70. If we take a look at what is moving to the downside, you got Zumiez. So our two leaders in the clubhouse, to the upside and to the downside, Zumiez Inc. Z-U-M-Z. Zoom. They are down 10% this morning, trading out right now at $28.90. Let me see what Zumi is. Maybe I can go look and see what they actually do. They came out with earnings. Their net sales, $135 million versus $112. Net income, $2 million versus $2.5. Trading down 10% this morning. Facebook having another tough day out there, down 67 cents right now, out at $18.43. And if we take a look at, let's go take a look actually at the full moon. I'm going to share with you a number of charts here that I shared with my subscribers this morning. Now, folks, I've built some tools. You see, I have the entire ephemeris, the digital ephemeris, for really a 300-year period. So between 1800 and 2100. I could have it for whatever time period I wanted, but I figured 300 years was plenty of data for me. And so what I'm able to do is I'm able to take whatever aspects I want. Could be lunar aspects, could be some other planetary alignment aspect. And once I've got all that data in the click of a button, I'm able to just simply go ahead and apply it to each of the charts out here. Now, if you're watching us on Tiger TV, what you're looking at as you're looking at these as the headings that are out there, the black section of the chart. So on the lower left or the upper left area, you'll see a dark line out here. That dark line represents the actual date out there, and so that would also align up with the candle. So as opposed to using some arrows out here. Now, every now and then what you will see is as you're looking at this chart here, you'll see the word near. So when it says near, what that means is that the actual full moon fell on a weekend. So the market was not open, and therefore you're not sure whether it's the session before or the session after that would be marking a higher low. So if we just simply go backwards, and this is just simply looking only at full moons right now. So if we take a look at the last full moon, you had the market moving down. That was the August 2nd date out here. You can see how the market moved down into that. On the full moon prior to that, you had the market moving up into that July 3rd area. That's why I said, from a bullish standpoint, you really prefer not to see the market moving up. You might think it's a good thing with the market being up 120 points, but as you're moving up into resistance areas and you take a look at how these and why these moons act as triggers, can't answer that question. But what I can do is simply say, let's just go take a look at the moon as being an indicator and see how it works. If we take a look at, and yesterday you certainly had the market moving down. Do I think that was the low? Could be, but if you take a look at full moons, the way that they behave as markets are moving down, the day of the full moon, the market usually is pulling down into it. If you look at the June 4th level, on June 1st, I was on a Friday. Everybody for the weekend thought the market was that was the sell in May. Everybody thought that was going to be the low. Of course, you came in on June 4th, and that, as well as other aspects out there, that created the low. The market moved down into that a little bit. March 8th, it was 2 sessions before that actually marked the low out here. So let me just come back and take a look at some other full moons for you. But if you're watching this on Tiger TV, you're seeing just simply a number of aspects. If you go back to June 15th, 2011, look at how the market was moving down into. Now there it was completing a pattern. And so that pattern looks like that was an A to B equals CD. We start off with our A point. You go to May 2nd, 2011, and your C point coming down looks like into the middle of May out here. And so as you were completing that full moon, as you were coming into the June 15th time frame, you were coming down and you were also completing the pattern out there. Take a look at the full moon going back to April 18, 2011. Look, so this is, we're just not using just a sampling here, folks, of just a few number of dates. I can just simply take this back on the S&P as far back as we want. And fear not, folks, if QE3 is being announced, I've got here marked the date of QE2. That QE2 coming in, that announcement coming in on December 2nd, 2010. So if the market is going to behave, let's say, in a similar fashion, a similar pattern, then what you will do is you will see that you've got plenty of time to jump in the market if you're not in on the long side. You'd want to wait until you see a area of resistance get taken out. You could have seen an area of resistance. If you come back to QE2, again, go back to the December 1st time frame, just simply come back and take a look at November 5th, 2010. So that area was a resistance. You had the market make a high in the S&P out at the 1227.08 level. You had QE2. The market moved up into it, and as soon as you got a close above that area came in on December 8th. That was a good enough signal then for you to have gone long, and that there was going to be a revaluation of assets in the market out there. So you can be, what you can do, folks, is just simply, depending on where you're at in the markets, you just simply have the opportunity to just simply be patient out there. Those were on the full moons out there. And if you want to see further studies on that, folks, just go to the homepage of tfnn.com. You can check out my newsletter. If you're looking for education, then that is absolutely the place to start on a daily basis, because I cover all of the futures markets, the currency markets, the commodity markets, the ETFs, the trades that we're in. Just as an example, today, 73-page newsletter with all kinds of charts, all kinds of education out there. Go to the homepage of tfnn.com and check that out. So let's go take a look at some of these stocks here that are moving and shaking out there, movers and shakers. Let's go take a look at Splunk. Splunk, let me see here, the ticker symbol SPLK. SPLK is the ticker symbol. And gapping up this morning, having some volume behind the gap. Okay, so this is an IPO. Let me refresh my screen, make sure we've all got good data out here. Looks like this is an IPO that came about in April 19th, 2012. It's now trading up towards its session highs out there. I'm going to go ahead and in a moment, let me see if I can actually look this up. I'm using a different system this morning here. It might not be as easy. Might have to do that during the break, or maybe somebody that then can tell me what does Splunk actually do out there. And so if we take a look at Splunk, though, it is taking out a swing point. That swing point happens to be August 21st. That did 314,000 shares. Today, so far, it's done 797,000 shares. So what you've got is, can I make my chart bigger? I can make my chart bigger. Let's go ahead and make this Splunk chart here a little bit bigger. Let's go take a look at the ABC pattern out here. Let's look at let's go use the swing point from July 12th. That'll be our A point here, and we'll go ahead and use as the B the swing point from August the 21st. So you can see right now what it's done is it has completed the 1-to-1 A to B equals CD. The price projection on that, 35.78. What is the price that it actually got to so far this morning? 35.74. If we take a look at what that's coming into, it's coming into some bearish candles out here. It's coming into the area here, well, it's coming in the swing point high going back to May 29th. That had 563,000 shares. So it's got enough volume. Should be able to get up in there. Hasn't touched that low, the low being 35.94 on May 29th. That was on Splunk. Let's go take a look at what's dropping. Let's go take a look at Zumia. Z-U-M-Z is the ticker symbol out there. And when we do go into our next break, folks, I'll go look it up and see exactly what these two companies do. So Zumia is out here gapping down this morning. This is coming into some areas of, let's see here. It looks like it's coming into some areas where there were some signs of strength. So this is kind of an interesting looking chart here. Let's go ahead and pull this thing back. Okay, so I'll put this on a weekly chart in a minute, but let's look at what it's doing right now intraday. Now you do have volume coming out of this thing, so it's breaking swing points. The swing points, it's breaking a swing point that had volume. Last time on the way down was May 18th, 1.6 million shares. That low was $31.65. You tested that low on lighter volume here over the course of the last, let's just take a look at the last few trading sessions. Those being the trading sessions that I'm referring to are August 24th, where you did 1 million shares. You do 634,000 the next trading session. On the 28th, 716,000 yesterday. You do 1.6 million shares. But again, folks, that was going into I was also going into 1.6. But what does it do this morning? Takes out that swing point with volume. So far, 900 771,000 shares on a breaking a swing point. And what it's doing, it's coming and it's going to be testing the strong hands out there. It's going to be coming and testing the breakout from January 5th, 3 million shares on the way up. So it should have that type of similar volume here today. We'll see if that'll be supported. There is a open window that is still out there. That open window was starting at the low of January 5th. That low is at 28.18. If you take a look at the high of the other session on January 4th, you're looking at a high of 26.74. There's also another sign of strength out here. So you would suspect that zoom, this area here where it's trading at right now should hold, because you've got another sign of strength on December the 2nd out there with 3 million shares. But let's put this on the weekly chart. Let's see what Zooms is doing on the weekly chart out here. And Zooms is trading inside the candle of January 6th out there. That's your high volume bar. And so what you would want to do is take a look at this equity as it comes back to the level of 25.57. That is on ZUMZ. Don't know what they do, but we'll figure that out during the break. Let's go see what else we've got going on in the market. Let's go take a look at Apple. You got Apple up $1.90 right now. AAPL is the ticker symbol. And Apple here having created, now this is the strength in the this is the strength in the market, right? And what you did with Apple, or what Apple did, is it created that 1.272 butterfly as it made those highs on August 27th, getting up to the 680.87 level. You would suspect with the market being up like this, the Dow up 108 points, the S&P up 9, the composite up 17, that you wouldn't see Apple, trading up $1.40. Apple here yesterday was coming into the area where it gapped out. And the gap up, folks, was on August 24th. There was 15 million shares that it did. Yesterday it came back with lighter volume, 10 million shares. You're still inside that gap up, but that window has closed. That window is now fixed. That is no longer an area of support. And if anything, quite frankly, it becomes an area of resistance. That's the high on Apple on August 24th. 669 and 48 pennies. Trading out right now at 664.96. Now, if Apple does sell off here as any normal butterfly pattern, if you would take a look at where the price projection is going to be, it's going to be that dead cat bounce. It's going to be the 0.382 of your A to D leg. Your A leg on Apple is going to be down at the price point on May 18th out at 522.18. If you go from that low to the high that was put in on August 27th, what you're going to see is the 0.382 retracement, folks, getting down to 620.25. So it looks like that's really where Apple at least wants to trade to. There would be nothing wrong with that. And quite frankly, be coming back, and it would be testing the swing point from April 10th out there. That's on Apple. Let's go take a look at some of the commodities. Let's go see how the commodities are behaving this morning. Let's start with light sweet crude. You've got light sweet crude right now trading out at 95.89. And what you see here on the chart on light sweet crude, number one, and I'll erase a couple of these things. What you're looking at is you're looking at a couple A to B equals CD patterns that were completed. They were in the $96 price range. What that said was because of taking a look at a 618 retracement off of the swing point high that went back to March 1st, 2012, out at 110.55, all the way down to the low that was put in on June 28th, out at 77.28. When you're making an A to B equals CD and you've got the 0.618 level just in that area, it's in this case here just above it, that says that it's going to act as a magnet, and that's the area where it's going to go test. The 0.618 level being 97.84. That area, in fact, occurred on August 23rd. That area was tested as light sweet crude got up to 98.29. What did it do as it did that, folks? So it created a bearish engulfing candle. Next day creates a doji. The day after that, on August 27th, a bearish engulfing candle. Now, what is holding as resistance here, folks, is the uptrend. This you got a small uptrend here using the trend lines, just simply coming back to June 28th, the low there, your next candle being August 3rd. You can see that right now what light sweet crude is trying to do is get back inside there. It closed slightly underneath it yesterday. If it closes back below that today, it says light sweet crude wants to pull back. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. It is Fabulous Friday, and as we do every Friday, folks, coming up following this show, we've got the Nadex Bull Bear Binary Option Hour with Tom, myself, and Daryl Martin. Then we go up to Newton, Massachusetts to Basil Chapman, and today is always about health and wealth because we come back to Nico DeHaan from 12 to 1, Daryl Martin 1 to 2, David White from 2 to 3, Ken Shreve Show, the warm-up band for the Tom O'Brien Show from 4 to 6. As a quick update on the ESPN ES Mini as we opened up the show there. We were taking a look at the ES Mini 30-minute, making a 100% move of a move. That was coming into the 9 o'clock time frame. We then had the bearish engulfing candle as we came into the 9:30 open. Right now you've got a lower close. The close session on the ES Mini on the 30-minute was 14:06.50. You're trading at 14:06.25 with about 4.5 minutes here left to go. If we go take a look at Splunk, I did say I would go see what the Splunk was. Splunk provides software solutions, folks, that provide real-time operational intelligence. So it is an engine that collects indexes and harnesses machine data generated by physical, virtual, and cloud IT infrastructure. Now, that was on Splunk out there. Let's go take a look at Zooms, see what Zoomies Inc. does. They operate a specialty retailer of action sports-related apparel, footwear, equipment, and accessories. I don't know. It doesn't tell me what name. Maybe they go under Zoomies. Maybe somebody out in the den knows what stores they go by. And but that is on Zoomies. Somebody says Zoomies? Okay. Anyways, that's on those two equities out there. If we take a look at what is also now moving to the downside, you've got G-Man, G-M-A-N. It's Gordman's stores. They are trading down 19% right now. Their Q3 sales, $145 million, 145 to 147. Let me see here. Their net income, I was just trying to look at the actual numbers. Looks like they did earnings per share of 18 cents versus 15 cents. But let's just go pull up the equity here, take a look at it, see what it is doing. GMAN is the ticker symbol out there. And we take a look at it gapping down with volume. This thing has had a couple of, so it's coming down also into an area where it last broke out. However, these candles out here, they're always troublesome when you don't have wide price spread, but you do have accelerated volume. That is on May 25th. If you take a look at that, it did 1.2 million shares out there. The low on that happens to be a price of $16.59. You're trading at $16.55 right now. This thing actually had its first sign of strength and its first breakout. That was going back to March 19th when it gapped up the following session with 520,000 shares out there. That area held, though, so as the market moved back, created this little doji candle here on June 28th, came back with 49,000 shares. Boy, this is thinly traded, isn't it? 49,000 shares, was coming back and testing that 236,000 shares. And then what did it do? Goes ahead and makes an A to B equals CD up. But so that was your signal right there if you were going to take a long trade to go ahead and take it. Now, I wouldn't trade something that only has 46,000 shares, or I certainly wouldn't be too heavily weighted into that, but it's really a great stock chart to take a look at something coming back into a breakout area. May have been an A to B equals CD down. Let's go take a look at that as well if it was making a 1-to-1, and certainly it was out there. Let me redraw that here real quickly. So the A point on this is the high on April 3rd out at 22.86. The B point is the candle on May 11th when it gets down to 17.61, retraces back up into that shooting star on May 16th. The 1-to-1 A to B equals CD was a price projection, folks, of 15.55. It got down to 15.48, but came right back into an area where it had gapped up on lighter volume. That, folks, is a beautiful thing. Thanks for being here, folks. Stay tuned for the Nadex Bull Bear Hour. And if you're off, have a great weekend. I look forward to seeing you on Tuesday because it's a holiday, folks. Take care. Be safe. Bye-bye now.